I walked into my bank Tuesday morning to withdraw $50,000 cash from my business account. My money. My account that I've maintained for over a decade. No loan, no debt, no overdraft. Just a simple, straightforward withdrawal of funds I legitimately earned and deposited. What happened next revealed everything wrong with the modern banking system and why your deposits aren't actually yours in any meaningful sense. Let me take you through this entire experience step by step, because what I discovered should terrify anyone who thinks their bank account represents money they can actually access when needed. I've banked with this major financial institution for 12 years. Business account, personal account, never a problem. Balance, well into six figures. Perfect credit, no flags, no issues. I needed $50,000 cash for a legitimate business transaction. Equipment purchase from a private seller who preferred cash, normal business activity. I called ahead Monday, asked if they could have $50,000 ready Tuesday morning. The phone representative paused, long pause, then asked why I needed cash. I explained. Equipment purchase. She said she'd note the request and I should come in Tuesday. Tuesday, 9 a.m. I walk in, approach the teller, explain I called yesterday about the withdrawal. She asks for my ID, scans it, types, waits, then says, "One moment, sir." She disappears into the back. 5 minutes pass, 10 minutes. She returns with the branch manager. The manager introduces himself, asks if we can speak privately in his office. Red flag 1. We sit. He asks about the withdrawal. I explain again. Equipment purchase, cash payment. He nods. Then the questions start. What equipment? Who's the seller? How do I know this person? Where did the funds in my account originate? What's my business revenue? Do I have documentation for the purchase? Why does the seller want cash? Have I done business with this person before? Why not use a check or wire transfer? I answered everything, politely, but I'm thinking, this is my money. I shouldn't need to justify withdrawing my own funds. The manager says he understands, but for amounts over $10,000, they're required to file a currency transaction report with FinCEN. The Financial Crimes Enforcement Network. The government will know about my withdrawal. Fine, I have nothing to hide. File the report. The manager continues. He says that while they can process the withdrawal, it will take 3 to 4 business days to have that much cash available. The branch doesn't keep that much on hand. They'll need to order it from their central vault. Wait, what? This is a major branch, downtown location. They process millions daily. They don't have $50,000 cash. The manager explains that due to security concerns and digital transaction prevalence, branches maintain minimal cash reserves. Most transactions are electronic. Large cash withdrawals require advance notice and ordering from regional facilities. I ask how much cash they have available today. He can't tell me exact amounts for security reasons, but suggests if I needed the funds urgently, I could withdraw $9,500 today and return tomorrow for another withdrawal. Red flag 2. He's literally suggesting I structure my withdrawal to avoid the $10,000 reporting threshold. I tell him that's called structuring and it's illegal. He backpedals, says he's not suggesting anything improper, just offering options for faster access. But the suggestion was clear. Break up the withdrawal to avoid reporting. That's a federal crime, and he just recommended it. I stick with the full $50,000 withdrawal. He says he'll process the order. I should return Friday. They'll have the cash ready. He also mentions that for my protection, they recommend I don't carry that much cash personally. They can facilitate a wire transfer or cashier's check instead. I decline. I need cash. Friday morning. I return. Same branch. Different teller. I explain I'm here to pick up the ordered cash. She checks, confirms, then asks if I have a large bag or case. I brought a backpack. She says, for security, they recommend I count the cash in a private room rather than at the counter. We go to a small office. She returns with the cash. 50 bundles. $1,000 each, all hundreds. Still in bank bands. I start counting. About halfway through, the branch manager appears, asks if everything is satisfactory. I say yes. He lingers, watching, making me uncomfortable. This is strange. I finish counting. $50,000 confirmed. I sign acknowledgement of withdrawal. The manager hands me a packet of papers. The currency transaction report. My information. Transaction details. Amount, date, purpose, all being reported to the federal government. My withdrawal of my own money is now in a federal database. The manager suggests I use the side exit instead of walking through the lobby with cash. Security precaution. I agree. As I leave, I notice a security guard watching me closely, following me to my car. Making sure I leave safely, he says. I feel like I'm being escorted out of the building for withdrawing my own money. Drive home, money secured, transaction complete. But the experience revealed something disturbing. The banking system doesn't actually have your money. They don't expect you to withdraw it. And when you try, you're treated like a criminal. Let me break down what I learned and why this matters for everyone with a bank account. First, banks operate on fractional reserve. They don't hold your deposits in a vault, they lend them out. When you deposit $100, the bank might keep $10 in reserve and loan out $90. That $90 becomes a deposit at another bank, which keeps $9 and loans $81. The cycle continues. Your original $100 creates hundreds in the banking system through lending multiplication. This works fine when everyone doesn't want their money simultaneously. But when people try to withdraw, banks don't have the cash. They have assets, loans, mortgages, bonds, not cash. Converting assets to cash takes time, hence the 3.pound to 4 day wait for my withdrawal. Second, cash withdrawals over $10,000 trigger mandatory currency transaction reports. Banks must file these with FinCEN. The government tracks large cash movements. Why? They claim it prevents money laundering and terrorism financing. The reality? It creates a surveillance system tracking all significant cash transactions. The $10,000 threshold hasn't changed since 1970. If it adjusted for inflation, it would be around $75,000 today. But they keep it at $10,000 because they want to capture more transactions. They want more data, more surveillance, more control. Third, structuring withdrawals to avoid the reporting threshold is a federal crime, even if the underlying purpose is legal, even if you have nothing to hide. If you withdraw $9,500 today and $9,500 tomorrow to avoid the $10,000 report, you can be charged with structuring. Your money can be seized. You can be prosecuted for withdrawing your own money in a way that avoids reporting. Banks know this, yet my branch manager suggested exactly that. Why? Because banks don't want to process large cash withdrawals. It's inconvenient. It requires ordering cash. It depletes reserves. It creates security risks. They prefer you use electronic transfers where the money never leaves the banking system. Fourth, the bank treated me with suspicion for a completely legal transaction. Questions about the seller, the equipment, my business, as if withdrawing my money required justification, as if I needed their permission, as if my deposits weren't actually mine. This revealed the fundamental truth about banking. Your account balance isn't money. It's an IOU, a promise from the bank to pay you. When you try to collect on that promise, you discover the limitations, the delays, the questioning, the surveillance, the friction designed to discourage cash withdrawals. Now let me show you why this matters beyond my personal experience. Banks are increasingly cash constrained. They face regulatory requirements to maintain capital ratios and liquidity buffers. They need reserves to meet Basel III standards. They can't afford to have significant cash sitting idle in branches. So they minimize cash holdings and rely on just-in-time delivery from central vaults. This creates vulnerability. If enough people try to withdraw simultaneously, banks can't meet demand. We saw this in 2023. Silicon Valley Bank failed. Customers tried to withdraw $42 billion in one day through digital banking. SVB didn't have the cash. They had to sell bonds at losses to raise liquidity. The losses triggered more panic. The bank collapsed. First Republic followed. Signature Bank. All suffered bank runs. Not physical runs with lines outside branches. Digital runs. Customers clicking withdraw on their phones. Billions leaving in hours. The banks couldn't convert assets to cash fast enough. They failed. The government response? Not to ensure banks maintain adequate reserves. Instead, they're quietly implementing capital controls, making it harder to withdraw cash, increasing surveillance, raising suspicion around cash transactions, pushing people toward digital payments that never leave the banking system. My experience is part of this trend. The questions, the delays, the CTR filing, the suggestion to structure, the uncomfortable escort to my car, all designed to discourage cash withdrawal and keep money in the system. Here's what else I discovered researching after my withdrawal. Multiple people report similar experiences. Reddit threads, online forums, people trying to withdraw $20,000, $30,000, $50,000. Same patterns. Questions about purpose, delays for ordering cash, CTR filings, suggestions to use alternatives. Some report even more aggressive responses. Accounts frozen pending investigation. Suspicious activity reports filed with law enforcement. Withdrawals denied entirely. Banks claiming they need more documentation, more proof of legitimate purpose, more justification for accessing your own money. One person reported trying to withdraw $40,000 for a car purchase. The bank manager called it suspicious and refused the withdrawal. Said he needed to verify the legitimacy first. Kept the person waiting for days. Eventually required a copy of the purchase agreement before releasing funds. Another person withdrew $25,000 for home renovation. The bank filed a suspicious activity report. 2 weeks later, IRS contacted them asking about the source of funds. They had to provide tax returns, bank statements, proof of income, all because they withdrew their own money for a legal purpose. The system is designed to trap your money in banks, digital payments, electronic transfers, debit cards, credit cards, all keep funds in the banking system where they can be lent out, tracked, controlled. Cash withdrawal removes money from the system. They don't want that. So what should you do? First, understand your deposits aren't really yours. They're unsecured loans to the bank. The bank owes you money but doesn't actually have it in a vault with your name on it. Your account balance is just a database entry. Second, expect difficulty withdrawing large amounts. Plan ahead, call in advance, be prepared to wait. Don't expect to walk into any branch and withdraw 5 figures same day. It doesn't work that way anymore. Third, know your rights, but understand the reality. You legally own your deposits, but practically, accessing them requires navigating bank policies, government surveillance, and artificial friction designed to discourage cash use. Fourth, consider diversifying beyond bank deposits. Physical cash at home in a safe, precious metals, Bitcoin. Assets you control directly without intermediaries. The banking system is becoming more restrictive. Having alternatives matters. Fifth, document everything. When you withdraw large amounts, keep records, the CTR filing, your stated purpose, transaction receipts. If the bank or government questions you later, you'll have documentation proving legitimate activity. I got my $50,000, the transaction completed, but the experience opened my eyes. Your bank deposits exist in a system designed to keep them trapped, withdrawing significant cash triggers surveillance, delays, and suspicion. The money you think you own is actually controlled by banks and monitored by government. My simple withdrawal revealed the truth. Your money isn't really yours until you hold it. Everything else is just permission to access funds that banks use for their purposes, and that permission can be delayed, questioned, or denied at any time. Think about that next time you check your bank balance and feel wealthy. Those numbers represent promises, not possession.